In this video, I want to talk about the stock market seasonal weakness that comes during the months of August through September or October, and why I believe that I don't think we're going to get the, usual 10% correction or, a crash that a lot of investors are calling for on X, on social media, and even institutional investors. And the reason why is because even though we continue to make new all-time highs off the April lows, there still continues to be a lot of record bears calling for a correction, a crash. It's, valuations too overextended. And the funny thing is, any bad news that you throw to the markets, whether it be, anxiety over the Federal Reserve interest rate cuts in September, or Trump tariffs, or, him firing, Lisa Cook, which came out today, the market shrugs off any news and continues to make new all-time highs. And that frustrates the bears even more, right? They continually short, they continually add puts, and that's actually more fuel for the bulls to push the stock market to new even higher highs and new all-time highs. So this is what I'm seeing so far. And the biggest catalyst to watch for this week is Nvidia earnings, which reports Wednesday after hours. And I believe that, even though a lot of people are calling for a top in Nvidia, that Nvidia is hitting some sort of, long-term trend line, you know, I think that Nvidia earnings will actually give us the necessary push for the S&P 500 at the triple Qs to even greater all-time highs. And the reason why is because if you look at the charts, so technically the picture off the April lows is incomplete as far as an impulse Elliott wave pattern goes. So if we have a one up, 1-2 setup off the April lows, we got the third wave, which hit 185 not too long ago, which was about the middle of August, and we got a small 4 correction that hit around 168. I believe that, this Elliott wave pattern is incomplete, and we should be able to get a fifth wave from earnings or, post earnings to, hit around 190 to 200. And that should complete the Elliott wave pattern, which maybe gives us a, consolidation here or a little bit of a pullback. And this is technically the picture why Nvidia should push higher. Fundamentally, if you've paid attention to all the mega cap earnings that have reported so far, whether it be from Microsoft, from Google, from Meta, from Tesla even, all of them increased their capex spending for 2025 and even their capex forecast for 2026. And that should bode well for Nvidia in the near term. A lot of the anxiety that's coming around at the top here probably coming from the profit takers at 185, and even some rumors that China won't be buying Nvidia chips anymore. And I don't think that is the case. I think Nvidia is still the gold standard when it comes to chips. China doesn't have any chips that can compete with Nvidia. If China decides to forego Nvidia chips and use their own chips, that's basically a death sentence for the AI industry, and they can no longer compete competitively when it comes to artificial intelligence and machine learning. I don't think the Chinese are that dumb, to forego Nvidia chips. So I don't think that should be like any, significant damage to Nvidia's revenue or forecast in the near term. So I expect their China revenue to hold up, and maybe during their earnings conference call they can address that, or maybe some news post earnings. But I believe that we should be able to get a push higher, and that should bode well for the S&P 500. And interestingly enough, if you look at the S&P 500 weekly time frame, the MACD is still, well into positive territory. We're not getting a bullish cross, a bearish cross that we've seen in the past years that resulted in a, 3-week sell-off or 4-week sell-off or whatever you want to call it. People are top calling, and that's the issue here. So as long as there are people top calling and trying to short the top and time the top, it's just more fuel for the bulls to push even higher. I think we can get to like 660, 670 at this point, before any significant pullback, while the bears continue to wait for their 10% correction or whatever they want to call it, right? And interestingly enough, we've seen some rotation in small caps, in cryptocurrency. That's what we're getting. That's why we're stalling out here on the S&P 500 and the triple Qs, which has seen a little bit of weakness. But I believe that, if you look at Bitcoin, we got a drawdown from $125,000 in the middle of August to around $110,000. I think this is a really good risk to reward ratio, for Bitcoin to push even higher to 130 to 140, in the near term. We see some little bit of support around the 110 level, which used to be resistance. A lot of money is being shifted to Ethereum. Tom Lee is hyping up Ethereum, and with his Bitmine immersion technology company, and Ethereum is gaining a lot of momentum. But I believe that the money will eventually shift back to Bitcoin and push back up to around 130 and 140 new all-time highs, and this should bode well for Coinbase, which has stalled since around the 450 level, 430 level, 440 level, around mid-July, and is corrected a little bit. I don't think the pattern here is complete for Coinbase. We did get a double bottom in the near term. We'll see what happens to Coinbase. I do see a little bit of bullish divergence with Coinbase. If you look at the MACD, it's forming higher lows, and then we are kind of flatlining. We formed a double bottom sort of formation in the near term. So that's a little bit of a bullish divergence. We'll see if Coinbase can push back up to fill its gap around 360, maybe even get back up to all-time highs, as we see strength in Bitcoin and Ethereum and all the rest of the cryptocurrencies. So in other news, there's some news that could shake the markets a little bit, like Trump telling Fed's Lisa Cook she's fired, and she's saying she has no authority to do so. We saw a little bit of volatility after hours in the S&P 500, but markets have actually rallied back to flat. So erased all the losses that we've seen after hours, based on this news. And I think overall it should be a pretty good week for Nvidia, the stock market, cryptocurrency as a whole. Like I mentioned, people are waiting on seasonal weakness in September and October. When a lot of people are waiting for the same thing, I don't think, we're going to get that drawdown that people are talking about, like especially with the S&P 500. People are saying like we're going to go back to like 6,000 minimum or 590 or whatever you want to call it. Nothing in the charts suggests to me that we're going back to 6,000. At most we could probably get a retest of all-time highs, which was around 613, 614, which is less than like a 4%, 5% sell-off. We're not going to get that 10% garden variety sell-off that we saw, in the past in September. So I think this time is a little bit different. When a lot of people are calling for the same thing, that's when it pays to be contrarian, and that's how successful traders navigate the stock market. So only when people don't expect the same thing, then maybe we get that that 10% sell off that we were looking for. But now a lot of people are looking for the same thing. That kind of goes with Tesla. A lot of people are looking for the break of the symmetrical triangle, and continue to move higher into 400 to 450. That's what has me concerned, because when a lot of people are looking for the same thing in Tesla, maybe we don't get it that soon, or maybe we get a shakeout before moving to 400, or the higher price targets for Tesla. So there you have it. I hope this video helps you guys plan for your trades over the next couple of months. If you have any questions or comments, leave them down in the comment section below, and I'll see you guys in the next video. Peace.